Do you believe in fate, Neil?
No,
Why not?
because I don't like the idea that I'm not in control of my life.
I know exactly what you mean.
But you should study history,
It's not necessarily history that repeats itself.
and history is the important thing you learn from.
It's the human actions that repeat itself.
What you learn from history is the market goes down.
And that's exactly what we're seeing right now.
It goes down a lot. The math is simple. There's been 93 years a century. This is easy to do. The market's had 50 declines of 10% or more. So 50 declines in 93 years. About once every 2 years, the market falls 10%. We call that a correction. That means that's a euphemism for losing a lot of money rapidly. But we call it a correction. And so 50 declines in 93 years, about once every 2 years, the market falls 10%. Of those 50 declines, 15 have been 25% or more. That's known as a bear market. We've had 15 declines in 93 years. So every 6 years, the market's going to have a 25% decline. That's all you need to know.
You guys will notice that what we're seeing in the markets is just basically history repeating itself. Right now, we're in a phase where all of your primary markets are starting to get diluted. And I think the month of February could be a month where they kind of just string the markets, almost playing with it like it's a puppet, you know? And the big thing that I want you guys to look at here, as we were just listening from Peter Lynch's video, he was talking about how every 6 years, we typically see a correction that's more than 25%. Now, if we're looking into the market, the last time we seen that correction was in 2021 to 2022. So if it's every 6 years, we are now following that same cycle. We're currently seeing a shift from the old way of dealing with finance and just the old way of living, and we're now shifting into this new way of living. We're hearing all this good news about these stable coins and these RWAs, but it's almost like the market's not aligning with all of the news that we're hearing. So this would cause a lot of confusion. We are in the process of this correction that we've talked about before. The Benner cycle, all right? Look at this right here. 2026. This is the year of good times, high prices, and time to sell stocks and values of all kinds. That's exactly what we've been seeing in the market so far. The start of 2026 was kind of like the time when everybody thought the markets would be pumping, but this is when the market started dumping. Through history, February is usually a pretty volatile month, but we haven't really been seeing the same thing. And the thing that sparked my interest the most, which kind of ties back into the whole stringing with the markets, just kind of messing around with them through the month of February, is because there are so many events happening in February. But most of the events happening in February are paper trading events and events that are falling under the almost marketing of crypto. And there's an event happening this weekend actually called the Crypto Investor Week. So if we take a look at that quickly right here, February 9th to the 13th. Now I want you guys to look at something else right now, okay? The Bitcoin Investor Week, this is happening February 9th to the 13th. This isn't the only event that we're seeing in February that's revolved around crypto. We also have the Consensus Hong Kong 2026 happening at the same time the Investor Week is happening, okay? And then we also have the Global Blockchain Show, which is happening literally today in Saudi Arabia. We have the ERCOT Market Summit, and this is from February 10th to the 12th, and this is in Texas. And then we also have the ETH, and this is in Denver. This is like a workshop for Ethereum. And then there's, if I'm not mistaken, there's more events happening, but these are like the primary events. And then we also just seen the Super Bowl. So to me, what this looks like is a month where they let retail kind of take control of how the market moves, but giving the idea to the retail investors that there will be a lot of institutions in that month. The month of February is really the time to buy, but I don't think that that's the case. It just seems like right now they're trying to pile up a bunch of cash. I think the month of March could really be the month when we see a pump in these markets. This is almost like a big advertising campaign that they have going on just to get a bunch of money into the markets and to pile up as much cash as possible before they do try to pump the markets. What we're seeing right now is a cycle where money's flowing into the infrastructures. It's not flowing into the big players in the space. They're on a pullback right now, is just to get all of the new money in the market. Because the fact that all of these assets are coming back at the same time. So almost like they're trying to entice people to start putting money into the markets. All they're doing is pulling the markets back for the people that are now just getting access to the markets. This is when small caps are really starting to see a lot of volatility, as well as meme coins and altcoins as well. But the reason why these small caps, these meme coins, these altcoins are starting to see a lot of money coming into their markets is because these are the assets that they plan to use to help stabilize and keep up the system that we're now moving into. They have to now work on building the infrastructure around it because they have all of the pieces in place, but they need something that can support the system. And that's why you heard me talking about before, it's these small caps that are really starting to pump. They're really just kind of keeping this market at a standstill point right now. They're not trying to pump it too much, but they don't want to drop it too much because it's not the time yet. This is a process. This isn't just going to happen overnight. So what I suspect is that it's almost going to be this kind of prolonged recession that we see going from 2026 to 2028. But because we have so much new tech now, they can control it in a way where it doesn't look like a recession. A lot of people might start panicking because they see all this random volatility in the market, but they're controlling it in a way where they're not doing too much in one direction and too much in the other direction, just enough to really start messing with the psychology of individuals. And this is what they want. They want to control the psychology of the individuals, because when you control someone's psychology, like when you start controlling their behaviors based off of their emotions, you literally have control over them. Money really, it doesn't rule the world, but in a sense it kind of rules the world. A lot of times when individuals start involving money in what they do, this is when things really start to get tricky. People either get greedy, people start to fear a lot because they don't want to lose the money, or they're very cautious because they're like, oh well, I don't know if I should do this, I don't know if I should do this. And this causes a lot of confusion, so we can't make informed decisions within the markets, and that's all these government systems want. This is a global plan. This isn't just a one country plan, right? This is a global shift. 2019, this was when COVID-19 hit, so that was the initiation of the shift into this new way of living. And then now we're really starting to see the implementation of it with all of the news that we're seeing with these assets that are now changing the way we approach finances, with how we live within our own daily lives. It's crazy what we're really seeing. There's even a lot of paper trading events happening right now too. So on top of the events that I was just looking at with the crypto investor week and everything, we have a bunch of paper trading events happening right now too. This is why I was saying before, it almost seems like the month of February is really just a month where they kind of string with the markets and prepare themselves for an even stronger push to come in potentially March or April. The month of February is typically a month where healthcare is really popping, the defense sector is really popping, and the energy sector is really popping. So it would almost align perfectly with the idea of the markets just, they let the retail traders kind of deal with the markets, making them think, you know, they're going to be in and this is the time to buy, but it's not really the time to buy. This is the time when you should be positioning yourself to buy. And then if we look across the commodity sector as well, we'll see that their market is kind of in the midst of pulling back. Some people might think that it's going to start running up. I think that the commodities are still going to be pulling back. Now I'm just using gold as like the kind of framework. Because we've seen so much volatility in gold recently, it makes me think that all of these banks and everything might let the markets kind of reset. And if that is what we see, it would happen over a prolonged period of time. So then come June, when after these primary markets have already pumped, so the crypto markets, and then as well as the infrastructures, that's when we start seeing that rotation, right? Goes from gold, stocks, you start getting into the commodity sector, and then you start getting into the energy, the small caps, and then it starts going into Bitcoin, the large cap altcoins, the low cap altcoins. And this is exactly what we're seeing right now. We're seeing the money going from gold, going from stocks, going from the commodity sector, now into the energy sectors, the defense sectors, and as well as the healthcare sectors. And a lot of these sectors right now, the ones that are popping, at least the markets that are popping in these sectors, are the small caps. And there's a lot of money going into the ETFs right now as well. And they've used the ETFs, at least from what I've seen, to suppress the markets when they don't want it to pump too heavily. And that's why we're seeing all of these ETFs dropping right now. The cycle we're in, you guys got to remember, it's the cycles that put us into the trends, okay? And we're in a rotation of money right now. So from what I'm seeing, it looks like this is the direction that we're going to be moving to. So I wouldn't be surprised if for the next couple of weeks or the next couple of days, the market kind of consolidated for a little bit and slowly made its way down. And then closer to the end of February, maybe that's when we start seeing the commodities markets move down more heavily. And then we start seeing money start flowing into the crypto sector a bit more. If this is the case, June could be a very hot month for the commodity sector. And this is when, after we've already seen the cycle through crypto, like I was just showing you guys, that's when the money could start flowing back into the commodities again. And it's just this constant cycle. Now, it's not to say that we will follow this cycle forever, but it's lining up very closely. Look at this right here. 2032, this is years of hard times, low prices, and a good time to buy stocks. Now, this isn't just stocks, this will be crypto as well. But it's by 2030, this is when this is going to happen. This is when this market's going to be up. This is when this market's going to be up. That 2030 area. Now, isn't that interesting? And Peter Lynch was just talking about every 6 years, we typically see a correction that's over 25% or more. So if we're looking at it right now, and I'm just going to use Bitcoin as this example, right? I'm just going to use, this is what I'm using. I'm going to dive into the Dixie in a second as well. But if that is what we're aligning with, okay, 2021 to 2022, this is when we've seen a market pullback of 77%. Now, what did we start seeing at the end of 2025? We started to see these markets pull back, okay? Now, if we are seeing that same cycle and we do see another 70% correction potentially, right? I'm not saying it'll happen for sure, but it's really looking like this is what we are seeing. We already seen a heavy pullback at the start of 2026. So it would make sense that there is a pump to come soon. But it's not going to be a breakout run yet. I suspect that if we are to see this breakout push, it would happen closer to the end of the year. And that is usually when we do see these markets really pumping, is closer to the end of the year. So it would almost be this prolonged recession that we see, but it wouldn't look like a recession because they have the tools and the tech to control the markets a lot easier now. So for them, this is just a way for them to position themselves more strategically while they're in the process of building out the infrastructure needed to hold this system up. Okay? And if we look at it, the month of March is typically a month of uncertainty. There's usually not much happening in the month of March. Everybody's usually sleeping. Look at here. In 2021 to 2022, when we seen this market pullback happen, February was bullish and March was bullish, and then the pullback happened. All I'm saying is that we very well could see the same thing. And then what do you know? It was after that pullback that happened, that's when we started to see the run up again. And if it's 6 years out from 2022, where does that put us? 2028. So we very well could be at lows in the market in 2028. Doesn't mean we will be, but we are seeing that exact same cycle right now. And then you guys got to remember too, we're seeing a lot of historical events kind of stemming again. But it's not these historical events that are kind of repeating themselves. It's the human actions that are repeating themselves. And when we seen these events in the past, this accelerated us into the push of a new world order. What are we seeing all over the media? A new world order.
Remember, all I'm offering is the truth, nothing more.
So we would be aligning perfectly with the timelines. Now, I think after 2028, the cycles could potentially change. Now, maybe not. But the reason why I say that they could potentially change is because we are literally moving into a new way of living. We are moving into a new way of approaching finances. So if we are completely kind of shifting the way we do things, it would make sense for them to try to switch up the cycles of money, because they know that people are going to start to catch on. But because people are starting to catch on, that's why we're seeing so many events and so many things happening right now, like these global wars, right? All these events that would cause a lot of emotions to rise, that would start to alter the psychology of individuals. They're starting to push this stuff more. And that's why I was saying before too, we got to be careful with how much we are on the social media, because you guys got to remember, the social media, they control it. They control what goes on the media. So it's really just what they want us to see. It's not actually what's happening. And if you look through history, they use those, like back in Roman times, they would use the big duels and everything to basically distract the public from what was actually happening behind the scenes. Although we aren't seeing those, like, you know, the Roman way of doing things, we are seeing the exact same thing happening, but with social media. Now, social media and the news is captivating everybody's attention. And now it's away from where the attention should be. And that's how they're getting people's attention away from these market cycles.
What you are looking for to control the many when you are the few is control of their perception and control of their self-identity. Once you've got those two things, you got them.
Now everybody's confused. Everybody's like, what do we do now? What do we do? And this is how they're controlling individuals' minds.
To this point, as you say, it's information control. Where they want to go to complete the job, really, of complete perceptual control is to connect humans to artificial intelligence via what people like the Google executive Ray Kurzweil calls the cloud. And from that, human perception will no longer come from human thought and human emotional response. It will come direct. So no more even do you have to control information then. You have to just deliver to people the thoughts you want.
Everybody had this anticipation that the markets would run a certain way based off of how past history was, right? That January would be a very bullish month coming out of December, and that February would be very bullish right after. But we've seen kind of the opposite. Isn't that funny? But when we look at it from a macro perspective, we still are seeing the same cycle. We're just seeing it at a bit of a different time. This is why I was saying before, that's why I anticipate that the month of February could just be a month where they're just playing with the markets. They're not really doing too much. They're just letting the retail traders and all of the events take control of the markets and how the money flows in the markets. Because they already know when there's a bunch of events happening like this, it's very likely that it will be bullish. It is very likely that the month of February could see a bit of could see some bullish activity. That does not mean that the month of February will be a very strong pump though. So I have this equal high zone sitting at 79,301 or 79,391. Maybe you guys want to set an alert on your chart too. Maybe you don't. That's perfectly cool. I'm going to be giving you guys the updates and everything as well. But I suspect that a market movement could happen very similar to this. You know, we kind of just see the market playing around for a little bit, maybe slowly climbing its way up. And then as we start to get closer to the end of February, maybe we break above here, maybe shoot up a little higher because there is an order block here, right? Maybe shoot up a little higher. And then we start moving down further come the end of February. That puts us up into an even stronger push in the month of March. And then maybe we see a bit of a retest in April, but ultimately this would put us into that same cycle of money that I was just talking about, where after that pump happens, now we start seeing the market move like this again. Market's moving out of the Bitcoin, Ethereum, the head honchos of the game. It's moving out of the large cap altcoins. It's moving out of the low cap altcoins. And now it's starting to flow back into the commodity sector. What I want you guys to keep in mind too is Bitcoin does have an important role in this space, at least from the research I've done. A lot of companies are building their treasury strategies around Bitcoin. Bitcoin is not just a random fucking thing in this space. You know, it has its own purpose. Now, that doesn't mean that Bitcoin couldn't go to shit. I'm just telling you guys based off of the information, this is what I'm seeing. A lot of companies are building their treasury strategies around Bitcoin. And what they're trying to do is get institutional adoption into the markets, into the crypto markets, because the institutions and everything are still a little hesitant on getting into crypto. I'm not saying that they aren't, but this is what we're in the process of seeing. We're in the process of seeing these institutions now getting into the market. And if you guys remember at the start of the year, there was a video talking about how it is an institutional-led market. It's not an institutional-led market because the institutions are flooding the market. It's an institutional-led market because the way they're controlling the markets is so that institutions can get in the market, so that institutions trust the markets, so that the institutions want to put their money into the markets, because they know that the institutions right now, the hedge funds, the smart money, they're primarily in the Forex markets, the futures markets, and the stock markets. They're not really touching crypto as much yet. They're not really touching all these blockchain tech companies and the AI tech companies and everything yet. They're still in the traditional way of doing things. But as you know, we are now moving into a new way of doing things.
You don't need tons of IQ in this business.
So they have to bring the markets back in order for everybody to get in. I'm happy you said that right, because that's exactly what we're seeing. We're seeing a lot of institutions now starting to get behind, one, the emerging markets, and two, behind the whole crypto scene. Now, crypto is very well an emerging market too, right? It's not just the infrastructures. The infrastructures we're seeing being built right now because they need it to hold up the system, but it's our world is basically going to be digital, right? It's going to be digital money. It's going to be a digital way of living. So as we're seeing this transition, I think personally for me and for other individuals as well, this is when you should be thinking to yourself, okay, what are the primary assets that I want to hold when the market is at a very significant low? Maybe that's a company like Nvidia. Maybe that's a company like Google. Maybe that's a company like Microsoft. But I don't think it's the time yet to start really flooding your money with these markets. So if we are, seeing these markets kind of move around a little bit and seeing a lot of money go into these infrastructures, why not take advantage of it while we can? Cash is not dead, and I don't think cash is going to be dead anytime soon. Now, that's not to say that cash isn't losing its value, but it still does have a very important role within all of this. A lot of people are holding cash right now because it's through these market pullbacks. That's when a lot of big money. So look at Warren Buffett, for instance. The nigga's basically sitting on a bunch of cash right now that he's just holding because he knows what's happening. He knows that the markets are coming back. He doesn't care that the markets are moving like this in the short term because he knows that in the longer term, he's already going to be ready with all of his cash sitting aside, right? But as we're seeing this pullback in the Dixie, in the US dollar, it's happening in a way where it's like people would think that the dollar would be pumping because of all of the geopolitical events and everything that's happening. But we're seeing the opposite. Isn't that interesting? It's like this kind of game of tug and war, you know, it's going back and forth. Now, peep this too, right? I was just talking about how in 2022 is when we seen that correction in the markets for the other markets. Look at this, right? When those markets were down, this was when the dollar index really started seeing some money really come into it. And then that's when the market started to flourish in the dollar index. And then what do you know? Bitcoin followed right after. What do you know? The commodities markets followed right after. So it's like, you can't make this shit up. Cash will still be relevant in emerging markets until the systems are fully built out for the digital ecosystem. Preach to that, man. Preach to that. And exactly, we aren't fully ready to be in this new world, this new way of living. So it would make no sense for cash to completely lose its value. Come 2028, we could be around this $80 range. And if we were, it would make sense because we are still in 2026. So that's still 2 years out, right? And if we are seeing a controlled recession, it would make sense that the markets are kind of just moving back and forth, but it doesn't look like a recession. It doesn't look like a recession because they don't want it to look like a recession. But the people who are really behind the scenes already know what's happening. It's just the retail traders that they don't want catching on. It's the people like you and me that they don't want catching on to what they actually have going on. Because if we do start catching on, which we are catching on. We are already there, guys. But it's about being able to stay grounded in the truth. That's the important part. So I know there's a lot of events happening. I know there's a lot of things happening, but don't let the media take your eyes away from what's really happening.
And if we are confused, then we jump to follow our thoughts instead of our senses. And this is no sense.
This is why I say the macro perspective always wins. And that's why I was saying have the assets on the side that you really do want to be loading up in as the markets are pulling back. So maybe you have like 3 primary assets in the stock market and 3 primary assets in the crypto market. And then maybe you have just some money you put to the side where it's like, okay, when I do see these opportunities where it's like I could take an advantage in the short term and potentially the long term with it, I have a bit of money to the side where it's like I can put that in. So maybe it's like $100, $50, whatever the case may be.
I think it's really stupid to try and maximize returns on short-term money if you're in an opportunistic game the way we are, where we want to suddenly deploy money.
We just going with the flow. And this brings us into the assets that I wanted to talk about today. So SRXH, this was the asset that I just talked about recently on the last Monday Market Mashup. And if you guys remember in that one, I was saying the month of February is a very volatile month for the healthcare sector. I guarantee if you guys start looking on the online and everything, you'll start seeing a lot of stuff around, like a lot of news around the healthcare sector as well. Not to mention, all right, the healthcare sector seen a massive pullback as we started to approach February. You guys already know when we see these pullbacks, what do they set us up for? An even stronger run up. And it would align perfectly with what I was just saying about how the month of February is a month when we start to see money really flowing into healthcare, defense, and energy. What better way to not pump the primary markets while still building out the infrastructure in the process? These are the cycles that we're seeing. And this is why I was saying it's not a bad idea to have a few dollars to the side to be able to take advantage of opportunities like this, because it is these types of markets that we are seeing pump. It is these emerging market opportunities that we can be taking advantage of if we are getting in at the right time. And the same pattern I've been seeing is that these assets typically drop, like the penny stocks. They've been dropping to around this kind of 20 cents to a cent range, and then they start really seeing money in the markets. What are we seeing right now in SRXH? The market's now sitting around this zone. But Vanguard just bought up in December 31st a shit ton of shares in their company. Why do you guys think that would be? And they did it after the pump. They did it after we seen this pump. Why do you guys think that would be? Because they know what's to come. They know what's to come, man. And this isn't the primary market that I wanted to talk about, like the primary asset, but this is just one of them that I talked about last week. So if you didn't get in, we are at a pretty solid buying zone right now. But the primary asset I wanted to talk about today is RackSpace Tech. You guys remember how I was just talking about them working on the infrastructures and everything right now. RackSpace is going to be playing a very big role in this. And the reason why is because their story is they're basically keeping the world from crashing while it changes. You guys might be like, what the fuck is this guy even talking about? We're going to get into that. Just hold on. All right. So they originally launched in 1998 and they're from Texas. Like that's where their headquarters is. What they do is they work with cloud service, and then they also work with the hybrid multi-cloud management. Guys, this will be huge. Now, their focus is on regulated industries like healthcare and like the government systems, but they go way deeper into that. Like the amount of sectors that they're actually dealing with is crazy. Like their primary sectors is the tech, healthcare, financial services, the government, the public sector. They got the retail, e-commerce, manufacturing industries, energy, the industrials, the media. They're providing this infrastructure. They're basically supporting these sectors as a cloud infrastructure and managed services provider. They're basically sitting under these systems, not inside them, but under them. Recently, they also seen a shit ton of shares bought up. This company right here, I appreciate you guys for that support too. This company right here, like I said, the role in this space is essentially to keep these sectors up from crashing while everything's in the process of changing. Now, December 31st, they seen 3 big institutions buy up their shares. They seen Vanguard, they seen UBS. Now, if you guys don't know who UBS is, they're like the biggest private bank in Switzerland, and they do something else too. They're the largest Swiss banking institution in the world, and then the world's largest bank, private bank. Yeah, they're the world's largest private bank. They bought up 548,000 shares December 31st. Vanguard, the same day, bought up 184,000. And then another company, GSA, they bought up 166,000. They're a really big investment bank too, or a private bank too. But they're top holders, okay? You have Apollo Global. I forget who Apollo, I was just doing research on them. I forget what, they're really big in the space too, but they have 129 million shares in this company. Vanguard has about 6.47 million. BlackRock has 5.25 million. State Street has 1.84 million. And if you guys know, Vanguard, BlackRock, State Street, these motherfuckers basically run the global economy. All right. So this doesn't mean start, throwing your money in, but when you see institutions this interested in the small caps especially small caps like these, that's got to spark something. And what that should be sparking is they know something that we don't. They know what these companies are doing. They know what these companies are turning into. It's just the public doesn't. And that's perfectly fine with them. They want that. This is what they want. They don't want us to know about these things. They just want these things to kind of sit behind the scenes because they have a bigger plan at play. And if we knew about plays like this, if the public knew about plays like this, it would mess up their whole plan. It'd mess it up completely. Like if you guys look at GameStop back in the day, GameStop basically got ran up by the public. Like, you can't make this shit up. Now, as I started to understand more of who these guys were, I was like, damn, like these guys are big. So they deal with the multi-cloud management industry, and this industry, now they also deal with the cloud services industry or the hybrid cloud marketing industry. Both sectors that they deal with, that they primarily work with, one of them, the first sector, which is the hybrid cloud management or marketing, whatever the case may be, this is supposed to grow by $200 billion by 2031. What did I just say? Everybody's talking about that 2030 to 2031 time, and the market cycle thing said it too, right? It said that time is the time when we should be looking to be buying these stocks and shit. Look at that, okay? 2032, years of hard times, low prices, and good time to buy stocks. Now, this would also be going for crypto as well. As we know, this is kind of what's changing the way we live right now. But it's just to show you guys like how these things are aligning, right? As they're doing this, or as this sector is supposed to grow by that much, the other sector that they deal with, which is the multi-cloud management, this is supposed to grow by $100 billion. So right now they're like this line of industry, whatever. This is sitting around like 16.4 billion for the valuation for where they're currently at in this kind of market. It's supposed to grow $100 billion by 2035. Guys, okay? Hold on. What was we just looking at here? Years of good times, high prices, and time to sell stocks and values of all kinds. 2034. Years in which panics have occurred and will occur again. 2035. Guys, come on. You can't make this shit up. Like, you can't make this shit up. Like, this is crazy, you know? This is crazy. Like, this is the thing that a lot of the public is missing. Because we're so caught up in the news, we're so caught up in what's happening. Chemicals are popping right now too, and that's how you also know that this cycle is really starting to move. Because as we know, the chemicals and the energy sector, as well as the small cap sectors, they come after the gold, the stocks, and the commodities. Right? So if you guys are looking to take advantage of these short-term market opportunities that could potentially even lead into longer term, because remember, it's these small caps that are starting to turn into the infrastructures that are going to support the system, right? This is the time when we start taking advantage of them. If you're getting into RackSpace, I suspect that they could be still dropping lower. Like, I think that they honestly could drop to around like this 30 cents to 20 cents range. But this just means that this is when we just slowly get our way in. So I have a buy order or a limit order set for 4109. Okay. I'm not loading up like a shit ton of money. I'm just kind of getting my way in, right? Just putting a bit of money in at a time, because like I said, I am noticing that trend where a lot of these small caps are reaching down to that kind of 20 cents to that cent kind of range. And then that's when we really start seeing money in the markets. But then again, keep in mind too, a lot of institutions bought a lot of shares recently. So it's very likely that they might not even make it down to this 20 cents range. They might sit around like this kind of 40 cents to 30 cents range, and then really start seeing their market start to pump. Because I didn't even say this. Look at this, right? Their market cap's at 100 mil. So for a small cap to be at 41 cents with 100 mil market cap, Something going on here that the people aren't talking about. I want you guys to peep something as well, right? Joseph Vito joins RackSpace Tech to lead strategic partnership alliance. Now, I don't know who the hell Joseph Vito is. That's not the point. The point is, right now we're seeing a lot of changes in staff to a lot of these companies, especially in the small caps that are starting to see the changes within their own system that are being used in order to support this new system that we're seeing being implemented, right? It's the staff that are that they're starting to throw out because they're used to the old way of doing things. They're not used to the new way of doing things. So they need to implement new staff into these infrastructures in order to follow with what is actually going on. Come on, guys. Like, you can't make this shit up. All right. And I noticed that the reason, or at least from my understanding, the reason institutions are so invested is because they see these companies that have evolved from or this company that evolved from a simple hosting provider into this infrastructure glue of the digital world. Now, I created this little thing with AI, and this was based off of just information that I gathered through this company through the years and their history. So 1998 was when they kind of started everything up, right? This is when they really started to get integrated within the system. 2011 to 2022, this is when or 2020, this is when they seen like this strategic pivot. And this was when they really started aligning themselves with the emerging market opportunity that we're seeing being presented right now. All right. So 2021 to the present, this is when they became like this infrastructure glue that I was just talking about. Okay. And then now we're seeing a bunch of institutions getting in on them at the end of Q4. That was at the end of last year. Isn't that interesting? Isn't that interesting? And one of the primary sectors that they do deal with too is healthcare. So it's very likely that they could see some money hit their markets come February, right? They could be following along with all of this too. If we look at civilization as this type of growing nervous system, we've now moved past the era of just this raw computation and these simple networks into the era of coordination. Everything's starting to align with the vision that the system's already set up beforehand. That's why Trump's currently in office doing what the fuck he is. It's not because he's trying to, like he is, doing his own thing, but he's just like the dummy. He's like the decoy for all of this. He's basically the person that they're using for everybody to put the blame on. And they've done this in past years too. This is literally history repeating itself. This isn't nothing new, right? You guys got to remember these guys that we're seeing coming up, like Elon Musk, Trump, all of these guys that are basically phonies, acting like they good, they phonies. But it's these families that they've been with. If you guys really start looking into the origins of like their family history and everything, man, it's almost like this was planned. Like, it basically was. You know what I mean? Like, it was planned. And once a civilization reaches a certain level of complexity, it must devote more energy to maintaining coherence than to just expansion. So we already seen the kind of expansion part of it all. So now what they're doing is they're focused on the coherence. They're focused on now aligning everything. So they've already got everything in place. Now they just need to build the infrastructure behind the scenes. And what better time to do it than when the market is seeing a recession? The same thing happened in 2008. And the same thing happened in the dot-com bubble too. This isn't anything new. All right? We're seeing the same thing happen. It's not history that repeats itself. It's the human actions that repeat itself. So this is exactly where RackSpace lives now. Okay? Essentially, they provide this gravity type of support that keeps these systems from tearing apart. This role of entropy management, or in other words, this like the strategic effort to basically counteract disorder and inefficiency within these systems, whether it be physical, organizational, or digital, they're doing this by consciously maintaining the structure, optimizing the processes, and then also enhancing the sustainability. And this is why institutions are now quietly positioning themselves in RackSpace. They aren't looking for the next flashy headline. They are investing in the quiet stewards of continuity. Guys, this is why I was saying it's these type of plays that could very well turn into bigger plays in the future as well. So it's not just the short term that we're seeing, it's the long term as well. But that doesn't mean they won't pop in the short term, because I mean, look at this. This is just one asset, for instance, right? SAFX, they pumped like 100% in like one day, right? GPUS, they pump massively, and I guarantee there's another pump on the way. You know, I was just talking about them recently about buy zones around 20 cents and 18 cents. I still think that they're going to drop below 18, right? If you guys didn't get on those assets, that's okay. I'm just showing you guys, like, it's these small caps that we're seeing them put money into. And then OPTT, right? I was talking about them previously before they pumped too. What did they do? They pumped up to 70 cents. That's like 100%, right? Like, you can't make this shit up. And RackSpace reminds me a lot of OPTT. And that's why I was saying that I don't think that RackSpace will get down to this 20 cents to this cent range, because if you look at the market cap, it wouldn't make sense. As well as how much they're getting from institutions like the buying, it wouldn't make sense. But it would make sense for RackSpace to drop to this 30 cents range and then start seeing the market pump. So that's why I was saying, if you are positioning yourself in a company like RackSpace, don't do it super fast, but kind of slowly position yourself in. So, you know, maybe let's say you have $100 that you're going to put into RackSpace. Maybe put in $25 at 41 cents, or like $40 at 41 cents. And then if it drops lower to this like 35 cents to the 30 cents range, you put in a bit more. If it drops a bit lower, then you put in a bit more. But I think where we would max out at is around this 25 cent range. Very well could be too. Especially since the month of February is the time when healthcare is really seeing pop. And if you guys remember, I was just saying, healthcare is one of the primary sectors that they deal with. So this isn't like this doesn't mean this is like the next big thing, but these are plays that we can take advantage of in the short term and in the long term. So we might as well while they're here, right? And this is like the small cap season. If you guys notice, from like January to even now, we've been seeing a lot of dilution, or at the start of the year, we've seen a lot of dilution in these markets. When it came to the small caps, at least. Why do you guys think that is? Because they were preparing themselves for times like this. This isn't random. It's a strategic realignment of the funds. They're basically just they're moving into a new way of doing things. If you guys look at BBBY, if you guys look at GPUS, if you guys look at SRXH, right? SRXH is basically going to be used to be the backbone behind tokenizing the healthcare sector. GPUS is basically like the backbone behind building out the infrastructures in the States, at least when it comes to AI. Bed Bath & Beyond, their company or one of their subsidiaries, T0, they're now using T0 and their tech to tokenize the whole stock exchange. It's the plays that already had a solid foundation, just the old way they were doing things was dying. So they're now using them to build the infrastructure off of, because they already had the foundation. All they had to do was restructure the way they were doing business. And that's why we're seeing a lot of staff now getting washed out, and we're seeing new staff come in. Yeah, man, this is just one of them plays, man. So as we end today off, RackSpace is really one of them plays that could be really solid. Thank you, bro. One love. Yes, sir. Yes, sir. Anyways, that's all I got for today. Stay blessed from the best. Peace and love.